So next question I have for you is international value stocks.
Yes.
So if we look at the data sets and we compare it to US, international value stocks have underperformed
US.
US value stocks. And
Well, actually,
Japan is one of, is Japan a largest exposure to international value?
yes. So Japan is about 23% of the international value allocation by country.
Okay.
Okay? So we have a very large allocation there. And what we've seen, though, is Japan, for a very long period of time, what was it? Oh, I don't have it in here, but we had it in an email. So Japan, from 1990 to 2018, which is what, 38 years, has had a return of basically zero, an annualized return of zero, a total return of minus 0.03, I see. And so that has basically been a drag on international value relative to our U.S. value, or U.S. large even. So, so that's basically the answer. So the question really going forward is, do we think that Japanese companies, risky companies, will continue to have a zero cost of capital going forward? Now, that's a little bit of a mind bender for most people. Most people don't think about their returns as being the cost of capital of the firm and its shareholders. And this is part of Merton Miller's Nobel Prize. What he said is if you own securities and you decide you'd rather have cash or capital instead, well, you sell those securities for cash. And to get that cash, my cost is the return I forego in those securities in the future, right?
Yeah.
So if you earn 10% over the next 5 years and I have cash, I had a cost of capital for that cash of 10% a year.
Yeah.
Okay?
Yeah.
So to say that any company, whether it be in Japan or the US, has zero cost of capital forever, I think is a falsehood and something that investors should not rely on or expect.
Okay.
So that's a long way of saying that I would expect and anticipate that someday we should get positive returns out of Japan, and maybe they will be enough to make up for this very extended period of zero returns.
Okay.